Everything is shooting upwards and you are still expecting it to be a bull trap. You are waiting for Bitcoin to drop below 60k. Let me show you exactly why you're wrong. Macro charts, capital flows, and liquidity. Is the smart money flowing into Bitcoin or are they fooling us again? Bitcoin under the microscope of altcoin wonderland. All the important price levels you need to know. Oh, and don't forget to smash that like button and subscribe with the bell on, so we can keep making quality content. Market and crypto analysis as it should be. Trading tips with Altcoin Wonderland. The opinions and views expressed on this channel are strictly personal and do not represent financial advice. Always do your own research before making any decisions. And now let's continue with the chart analysis. Today is April 17th, 2026. Prices are exploding higher. Positive news is coming out, but how do we know if they are playing us or not? Some people are still waiting for Bitcoin to go below 60k. Let's see if that's actually likely to happen. We're looking at capital flows, liquidity, and tons of charts that reveal the truth. The news coming out right now is clearly de-escalation news. I was expecting April to be a de-escalation month between Iran and the United States. And here we are. Stocks have already reached their previous highs. Some people were expecting a minus 80% crash. I never saw that happening, at least not right now. And this is why, guys. Oil is also moving exactly as expected on the weekly chart. We saw it hit resistance and we were waiting for it to head lower, which signaled that we would likely see at least a temporary de-escalation. It may flare up again later, but right now on the daily chart, oil is moving down. It could even reach the $70 to $80 zone before continuing higher. So we have a window of de-escalation for the next few weeks, possibly even months. Brent oil measured against S&P 500 also is going down, showing this exact dynamic of de-escalation as capital is flowing from oil towards stocks. We're also looking at Brent versus crude oil. Brent is the one that has the problem because of the closure of the Strait of Hormuz. Crude oil is the American one produced from the ground, so it's less affected. In the futures market for May and June 2026 contracts, we see their correlation before the Iran situation started was around minus 3.5. We are back to that level now, guys. That means the big players are betting that in May and June of 2026, Brent oil will normalize against crude. This again shows they believe the situation will de-escalate further. The same picture with Lockheed Martin, one of the biggest US weapons manufacturer. We saw it in a weak phase and expected a correction. It confirmed de-escalation. It broke below the 617 level on the weekly chart, and the delta volume on the footprint chart was green while the candles were red at the top. Classic sign of weakness. The players couldn't push the price higher. Now, look at the small and mid-cap stocks. The Russell 2000 has tested its 2021 and 2024 highs, bounced, and is almost back at its previous all-time highs. Even the microcaps, the smallest 1,000 stocks inside the Russell 2000, plus 1,000 even smaller ones, have bounced and are close to their previous highs. This shows where the money is flowing. A lot of money has rotated back into smaller and riskier stocks, which means the big players believe the situation is de-escalating. We also see the same story with consumer staples versus consumer discretionary. This ratio has put in a bottom and bounced, exactly like the previous times. Money is flowing into riskier assets. The sentiment gauge is feeling better right now. High volatility stocks versus low volatility stocks have also bounced and are near previous highs. When high volatility stocks outperform, it means there is liquidity in the market and investors feel comfortable buying riskier names. Growth-oriented small and mid-cap versus value-oriented ones, the 600 growth stocks in the Russell 2000 are outperforming the 600 value stocks. Again, this only happens when there is plenty of liquidity. HIG ticker, the corporate high-yield bonds, are also performing well. They have bounced and have built a base while moving higher. Corporate bonds are outperforming government bonds. another clear sign that money is flowing into riskier assets. If we overlay the high yield index, HIG, the orange line, with Bitcoin, you can see how closely they move together. HIG is breaking higher right now, which strongly suggests Bitcoin is also in a strong phase or will follow. Real yields on the 10-year US Treasury are falling. That makes debt financing cheaper for America, which leaves more money in the market for risky assets and helps liquidity go higher. The US dollar index DXY on the weekly chart is hitting the 100 and 101 resistance zone exactly as we expected. On the daily chart, it's turning lower. Usually, a weaker dollar helps all other assets because everything is priced in dollars. When the dollar falls, it helps liquidity to expand higher. US banking system liquidity is also rising. It has bounced higher after forming a bottom, guys. Year over year percentage change of global liquidity is moving higher too. Both the absolute level of global liquidity and its momentum are pointing upward. Look at the rate of change of global liquidity. It is also accelerating upwards into positive territory. A huge part of global liquidity comes from the balance sheets of all major central banks, plus the M2 money supply of big and smaller countries. Now, all of this liquidity momentum and the Iran de-escalation is helping risk assets right now. So it makes perfect sense that most likely we are not going to see Bitcoin below 60K anytime soon. At this moment, we should be expecting a bounce, not a collapse. Obviously, nothing is a 100% guarantee, but the most likely scenario is upwards. Now, let's talk about what the smart money is doing specifically with Bitcoin on all the key price levels you need to know. Before I do that, quick reminder, guys, stay safe and protect your crypto online. For that, we recommend Proton VPN. It protects your online identity and gives super fast speeds so you can trade on a DEX or a SEX. You can find the link in the description down below. By using it, you also support the channel. Thank you, guys. Now, looking at the COT report from derivatives market, we see that large speculators, red line, they are heavily long. Above 80% of them are long. The commercial traders, blue line, at the bottom, are at the lows, meaning very few of them are long right now. This is exactly what we want to see when Bitcoin is building a major bottom. Commercial traders are usually the miners and producers who already hold physical Bitcoin. They tend to trade against the trend to hedge their physical holdings. Large speculators, such as hedge funds, usually follow the trend. They go long when they expect upside. Institutional flows into Bitcoin, which contain spot Bitcoin ETFs, plus other institutions, plus companies like MicroStrategy that buy the crypto for their treasury, tell us a story here. When institutional flows were falling while Bitcoin was rising, we were at a major or a local top. When institutional flows were rising while Bitcoin was falling, we were at a local or major bottom before a big rally. That's exactly what we are seeing today, guys. The price zone between 46 and 58K that we touched a few weeks ago is also roughly the average production cost of one Bitcoin. Prices around there are very attractive, and that's where smart money and institutions start accumulating. On the cumulative volume delta CVD chart, which shows the cumulative difference between aggressive buying and aggressive selling over a specific time, acting as a scoreboard for market participant aggression, green line is for spot Bitcoin. The blue line is for derivatives. Between 85 and 90K, the dynamics were very different. Today, the dynamics in both spot and derivatives have clearly changed. There is much less selling and much more demand coming in between 60 and 70,000 Bitcoin. This signals accumulation. Looking at large orders, 1 million till 5 million per order in spot Bitcoin, selling has decreased recently, while in derivatives, it's turning higher. Even when there is some selling in spot, price is not making lower lows. That means big passive buys from limit orders are absorbing the selling. The same picture appears with ultra large orders above $5 million per order. The dynamics today are completely different from the 80 to 95K zone. Strong sign of accumulation. Order book depth. Buy orders 20% below current price versus sell orders 20% above. We see a massive green wall, far more buying interest than selling. Same thing at 25% depth. This again confirms accumulation and strong demand between 60 and 70,000 Bitcoin price. At 0 to 10% depth, there is a small red zone because we have climbed to around 74K. So we might see a mini correction or sideways move before continuing higher. But overall, between 60 and 70K, longs have been building much more than shorts. As we can see, longs going up and shorts are decreasing. Open interest and the monthly change in open interest also suggest we should expect a small correction or sideways action first, because open interest has reached relatively high levels compared to previous instances. On the volume profile Bitcoin daily chart, the biggest volume since March 2024 till today has played between 53K and 96K, with the point of control being 67,000. Same thing since February 2026, when we dropped to 60,000 per Bitcoin. Heaviest volume between 65 and 71K. And point of control again at 67K. We have now broken above 71, so the path of least resistance is higher. The first real resistance zone is 76 to 81K. Why, you may ask? Well, that's because for starters, the Bitcoin realized price sits around 81,000. Average ETF acquisition cost is 76,000. Average institutional acquisition cost is 78,000, and the average corporate treasury acquisition cost from companies like MicroStrategy is around 81,000. This makes the 76 to 81,000 area a strong resistance and band, as some players might see those prices to sell at break even or get out at smaller lows, making the sell pressure increase. The liquidation heat map shows the same. 81,000 has some resistance, but the really big liquidation clusters are higher up at around 100,000 and 130,000 and 102,000. On the downside, major support is 55 to 58,000. On the hyperliquid live liquidation map, 77,000 is the level it needs to clear before heading to 98 and 100,000. On the downside, strong demand around 65,000. Hyperliquid stop loss cluster is at 71 and 68,000. So if we get a mini correction, I would expect something like 68,000 to 71,000 before the next leg up. There's also solid interest around 71, so I wouldn't keep my breath for the short term that we will see 68,000. And obviously, to conclude, I definitely wouldn't expect below 60,000 Bitcoin anytime soon. But you can drop your comments below, guys, if you have a different opinion, and tell us, what do you see happening? Do you think this is still a trap and we are going lower? Maybe we are wrong, so we are not gods here. Find us on other social platforms like Twitter for extra updates and info that we don't always share on YouTube. Thank you so much for watching, guys. See you next time. Bye.